very simple question. Will it be a V, a U, or an L? Go ahead.
Well, we've been in an L-shaped depression since the 2008 financial crisis. I mean, only the true economic data on unemployment, inflation, GDP, and the like have been warped or hidden outright while the Fed pumped up the stock market to give the appearance of a genuine economic recovery. I mean, we've been in a structural downturn rather than a typically cyclical recession, and those aren't easy to get out of. All of this since February is essentially marking to market, if you will, of collective economic metrics as the fake money pumping charade is being wrapped up in favor of a longer term planned monetary paradigm shift outright. I think there's a wider plan afoot because the mega banking and wider corporate conglomerate establishments want and need them, all of these, smaller companies, for instance, to fail. Small businesses will soon be vacuumed up by banks they owe debt to, or merged into larger corporations under forced oligopolies or outright monopolies in each industry. It's a repeat, essentially, of the consolidations which took place 12 years ago, only on a larger scale. So these banks, these mega banks, for instance, JP Morgan, Wells Fargo, B of A, they're being sued in class action, tellingly, for funding larger small businesses than smaller businesses with this Paycheck Protection Program, PPP, before that $350 billion in federal funds ran out. Why? Because the smallest small businesses don't pay these banks as much in fees as the larger small businesses, quote unquote. This is yet another unsustainable contradiction in the modern economic system where clear socialistic government handouts are nonetheless being prioritized through private institutions, foremost by their profit motives. I mean, all this stuff begs deeper questions.
Pye, but in looking at this entire saga over the last few weeks, I think it's absolutely shameful that Congress goes on vacation. We'll come back when there's an emergency. There's 26 million emergencies out there right now. Okay, I mean, they were very quick to pad their own pockets and their friends and their special interests here, and now they're still rethinking about how to continue dealing with the other parts of the economy. What we're talking about, small and medium-sized businesses, they don't just seem to feel the fire under their feet to deal with that, though they took care of their friends and themselves right off the bat, like in 2008.
Yeah, I mean, it's 2008 in a certain sense was just kind of like a dry run of sorts for this multiple in all means and forms of what happened then. You have to consider since 2008, I mean, the money that the Fed drove something like 93% of the stock market run since the 2008 financial crisis. Meanwhile, real unemployment was in double digits. Real inflation was much higher than what they stated that it was. Real GDP was much lower than it, it's lies, damn lies, and statistics, as the trite phrase at this point goes. But just since February, again, flipping the switch off in the living room, that's the equivalent of what the powers that be have done essentially to the economy. So there are no more corporate stock buybacks as of this point after February's lockdowns. So expect further eventual hemorrhaging within the stock market. This is all meant to further benefit the ruling transatlantic elite, which thinks in terms of epics and plans accordingly. It's aimed partly to cull a portion of the population while conditioning the yearning for non-means tested quasi-universal basic income via digital currencies for the millions of unemployed who will fall into destitution. A cashless society is planned, which has been sought for years, if you think about it, by transnational banks, the IMF, the BIS in Switzerland. These mega institutions they'll be introducing a cashless society after the modern dollar's reserve status ends and the currency collapses under aggressive inflation and mass treasury bond dumping globally, which is already in procession. I mean, before this virus pandemic hit, U.S. private debt was over 150% of GDP, with corporate debt being like 73%, and finance generally was like at 350% of GDP. Completely brittle, unsustainable system we had, where most debt at this point will be non-serviceable under a depression triggered by stay-at-home orders. So homelessness will spike even further, as will infrastructure decay, plagues, crime, and public riots, anarchy, and small businesses, again, going away near entirely. It sounds extreme, but if you were to say that there'd be lockdown orders and nobody would be able to go to work, let alone to their family members 3 months ago, that would have sounded extreme.
You know, the toolbox that the government has, are they doing enough or are they doing too little? Go ahead, Pye.
That's an excellent question. It really points to other questions over the role of government and, you know, these pillars, ideological pillars over the past 200 years of communism, socialism, and corporate capitalism, market fundamentalism. What is the meaning thereof? You know, the February shutdown is just a rapid bringing up to pace of, you know, really these questions over the role of government, because the government, more or less hand in hand with private institutions like BlackRock or PIMCO, you know, married to the Treasury and the Fed, are essentially dictating everything, not just geoeconomics, but politics domestically, and then geopolitics, if you think about it. But under the auspices of this pandemic, of this massive crisis, whereas it's just, you know, really piecemealing of its role prior crisis, not again, and prior to the 2008 financial crisis, the 2000 dot-com burst, you know, and Greenspan's role in dropping interest rates artificially and aggressively to, you know, avoid deflation. It's like, what is socialism versus a genuine market fundamentalism and genuine free market capitalism when you have this quote unquote free hand of the market not being so free and basically dictating so much? If anything, February showed overtly the very socialistic direct involvement of central banking and hybrid public and private banking in dictating the mores of our existence, to where I don't care how efficient you run your company, you're only 20 people. I mean, you're literally being put to the back of the line versus, you know, Shake Shack, for instance, which, you know, is still making money, is still bringing in revenue, whether takeout or otherwise, and yet they get pushed to the front of the line because of relationships, you know, call them cronyist or otherwise, but it's like, where is free market versus where is not? It's all meant to synthesize towards a further hybridization of what we would know classically as market fundamentalism versus just straight up, you know, giving $2,000 a month to folks that are destitute and or sick, and not putting them into poverty traps, but at the same time, questionably limiting them from all of a sudden wanting to become entrepreneurial, wanting to become Elon Musk, wanting to learn and advance. These are bigger questions that are just being brushed to the sidelines because, again, you don't want to get sick and ill and die. So those are, it's like there's purposeful confusion so that people aren't able to think lucidly and rely further and further emotionally and thus psychically on government, which transcends issues involving classical ideological definitions. There are over 5,000 federally insured banks and savings associations in the United States. Yet the 5 largest banks matter most obviously in terms of both the Fed and Treasury's policies, as well as in how skyrocketing systemic risks are concerned and viewed. There's vastly higher leverage now, certainly than in 2008, and yet the government has tactically shut down the economy, seemingly because of a very aggressive, newly concocted flu virus. Citigroup, JP Morgan, Morgan Stanley, B of A, Goldman Sachs, per the comptroller of the currency, I want you to note this, at year's end 2019, each of these 5 mega banks held something like at least 30 trillion of notional derivatives each, representing 83% of all banking derivatives. This is a fiscal powder keg. I mean, the owning powers behind these banks, and thus essentially national central banks, are pulling the plug now, performing a controlled demolition, if you will, of unsalvageable debt, edifices, and other structures in this wider economic system. The Fed already pumped over $9 trillion into this broken repo market since September 17th, I think, of 2009. Big banks will get another $4.5 trillion in bailouts due to this shutdown's effects. Main Street, meanwhile, will get a farcical fraction of this, the same as 12 years ago as far as patterns are concerned, i.e. a massive further wealth transfer taking place to a small elite en route to collapsing the system to erect a new post-debt jubilee-ridden and rewritten environment with an entirely new monetary system.
But that is not politically viable, okay? I mean, that is completely divorced to the life of everyday people. I see a little bit of frustration.